Okay, how we doing, guys? So I'm back. I've had a lot of messages from people saying they want more videos and stuff because I haven't posted it. I posted one YouTube video and then it's been now well over 2 months since the last one. People have been asking for more videos and stuff, but I haven't been well, as you know, but I'm fully back to my peak performance, fully at the top of my trading. I'm in a really good place right now. I'm back fit and healthy. Touch wood. And yeah, just here now, back smashing it, and I'm fully prepared now to sort of get more content out because I really miss teaching and explaining things. So what I'm going to be doing today is breaking down a position that I took yesterday. What day is it today? Yeah, it was yesterday. It's a New York long for 3%. It's a really nice position. It's just short in and out. It's full TP. And we're going to be breaking this down from a top-down analysis. Don't skip ahead. You know, we're really going to be breaking down this sort of high time frame narrative and structure, because there's a lot of detail in this that I want to sort of give you guys so you can sort of read and understand and sort of how I was seeing this, right? And sort of just before leading up to the trade idea, and we're just going to get straight into this, right? So if you guys had watched my other previous market breakdown that I posted on my YouTube channel, pretty much what we forecasted has played out, right? We got a mitigation to this supply, and what have we done now, right? We can see this most recent piece of fractal structure, which we can see here and identify by this range, okay? And as we can see, it's a piece of bullish market structure, okay? So if I just put this range on, we can see that we have the higher high, the higher low, and the higher high, okay? So right now we know that the expectation of this swing structure, if we're going to see it play out, is a new higher low before bullish continuation. Now, just looking on the weekly, what can we see? We got a mitigation to the absolute extreme demand level here. If we go down back now to the daily time frame, we can see we've got this like sort of 1, 2, 3 touch here, like this sort of exhaustion in price right here. We've got a mitigation into this demand, and as we can see now, we've had now this bullish intent after that mitigation. So right now we know that we could now be coming to target this weak high right here on the daily, okay? There is still reason for price to come and test up. I'm not going to go over all this weekly structure here and break all this down. I'm just sort of focusing on what we're forecasting on an intraday basis, which is what is the most important thing when it comes to building your narrative on a intraday basis and when you're coming to trade your sessions. So I understood this as we came into the week, and as we can see here right now, before the trade position occurred, which was around about here, I'll rewind price when we get to it. But before the trade, we hadn't taken this high yet, okay? So if we look from an internal structural perspective, we can see right here that we had this internal break of structure, okay? Creating this was a protected low, and this being our targeted weak high. If I just move it back to where it was prior to the position playing out, we can see that this was a protected low and this was a weak high, okay? Because we understand that the lowest point that leads to a break of structure is the protected level, okay? So we can see here that now we're showing some form of alignment internally alongside the higher time frame swing, because we understand right here, if I just drag this box back properly, we can see that we have this as the higher high, the higher low, the higher high. Expectation is new higher low before bullish continuation. And as we can see now from an internal perspective, we are starting to see this bullish market structure continue to hold, putting in these protected lows, forming this bullish market structure. So when we come down now and come to the lower time frame, this is important and sort of how I read this, okay? So when we come to the H4, what we saw is we had this break of structure bullish right here, which we saw on the daily. This was the protected low and this was the weak high. Now on the Friday, I actually caught this low here on the Friday. Like I said, I didn't hold it all the way because I only target my trades at 1 to 3 to 1 to 5. I got in and out of the position pretty quickly, but I caught the bottom of this, and some people who I still speak to were asking me why. So we understand, again, understanding what we know from the daily time frame and the demand mitigation we've had here, and this now bullish sort of potential alignment showing the intent for bullish continuation, we can see that this is our swing structure. This is our higher high, high low to a higher high. Expectation of this swing structure is a new higher low before bullish continuation. Now, the most important thing that what we are doing and what we're looking for is to obviously identify, in this case, demand levels that price can mitigate to fulfill the expectation to come and put in a new higher high. That is used through confluences and stacking the confluences of the demand levels to potentially see that mitigation to that level to then fuel that move to take the higher high, which we can see is what we've had, okay? So there's two main confluences that I like to look for. The first one is a disruption, okay, and that is a range that has taken liquidity on both sides. As we can see here in this case, we can see we take a high, we take a low, and then we take a high, okay? And then what this does is this creates here a new demand range, which is just a sell to buy range. This is a POI on depending what time frame that you're on. So this would obviously be an internal demand level. This would be the range, and this would be just the larger higher time frame demand level. So what I'm looking for is either a range that has taken liquidity on both sides, which is what I call a disruptive range, and also the other confluences that we're looking for is for price to have some form of interaction to either, if in this case we are looking at demand levels, we're looking for an interaction to some form of supply before we then get a breaker structure. So if we have a look at this right here, we're thinking about them two things, what can we see? So when I'm looking at this internal leg right here, we can see that we have this level here, which is in the premium. This for me isn't any form of area of interest to look for the bullish continuation. And we can see that what we have is we had this level here, and potentially something lower down into here. So first of all, what I'm looking at and seeing is, do we have any form of disruption, which in this case is that we don't. We can see that we've just put in clean bullish market structure, high low, high low, high low, high. Okay, so there's no form of disruption right here. Okay, so the next thing that I'm looking for is I will go down to a lower time frame and see which POIs have still taken some form of liquidity. As we can see, we have this POI right here, which has taken this form of liquidity here. We've still taken this structural low and continued. This POI has also taken some form of liquidity here via this structural low here, and then also this POI didn't, and then obviously this was our final one, and it also did take liquidity. So all of the ranges have taken some form of liquidity here, okay, but there's no significant disruption sort of on like the 4-hour basis. Okay, so the next thing that I'm looking for now is interaction. So as you can see, I've drew these lines across, and as we can see here that these interactions and pullbacks didn't interact to any form of supply to the left. Okay, and then when we have a look here, we can see that we had this interaction to this clear supply level that then we got the interaction and broke structure. So upon observing this, and what we can see here is that we've had now a potential mitigation here on Friday to what appears to be the most high probable demand level within this swing structural leg right here. And I could go down and refine this on like the M15 and the M1 and stuff, but this here, when we refine it down to like the 1 hour, the 15 minute, this is giving us the most high probable mitigation within this POI. So what we understand here now is that there are still demand levels lower down, yes, that are still valid, but this is, to me, is the most high probable demand level that we have within this swing. So if this mitigation is going to hold right here, now we understand that this low should not get broken, and we should now see this higher high get taken. So we should then start to see the formation of bullish internal structure to come and take this high. Now, the area of where some people get confused with market structure is when we get this breaker structure bullish and then this breaker structure bearish, this does confirm to us a new protected high and a weak low. And I'm not going to go into all the rules that I have in regards to fractal structure, but don't forget this is still a weak high on the higher time frame. And then when we break bearish here, this is protected from an internal perspective, and this is weak, but this is the higher time frame weak high. So what we know is if this mitigation is going to hold, then we should see the continuation of this bullish market structure internally form and hold to take this high. Because right now, if we believe that this mitigation is going to hold, despite it being weak, stacking the confluences of the higher time frame, we know this mitigation can hold now to take the swing high. So now we know we don't assume anything, but we know now this mitigation is high probable, and we potentially now cannot expect it to get taken. So now we can expect to see the continuation of bullish market structure to come and take the high. And in Discord groups that I'm in, I did say that I think we will see a new higher high. And somewhere where people got a little bit confused was where some people thought that we had structural alignment to come and spank this weak low right here. And I'm not going to go into too much in detail about fractal structure, because again, if we have a look and see this from an internal perspective, I had a few messages on Discord. People said that we got this breaker structure here, this is protected, this is weak. That is correct. And then as we can see here, we tested the extreme, and then what did we get? We got an internal structural breakback bearish as well. Okay, you can see we break structure, this is protected, and this is weak. So people said to me, have we got structural alignment, or people were looking for shorts? And are you incorrect to look for shorts? No, you're not. But think about the higher time frame structural narrative that's in play. Okay, this being our protected high, this being our weak low. We've had a mitigation to the most high probable demand at the extreme here, and then we've broken structure bullish on the higher time frame, starting to put in this bullish internal market structure. And then we've had a mitigation to the most high probable demand zone in the discount flip zone here. And even though that this is a weak low following this breaker structure right here, we know that this POI and this mitigation is a high probable mitigation to come and take this high and fulfill the expectation. Now, we need to ask ourselves, how does internal structure have to form? And that is through here putting in bullish market structure. Now, I cannot explain how we can sort of see this from a mechanical point of view, because you cannot, because fractal structure for me is very difficult to make mechanical, because this is something that comes with a lot of training and practice. So I, for example, saw that this isn't structural alignment when we took this low to the high to the low, where we also had this low, high, low. Because if we think about how bullish market structure has to form, if we come up from a higher time frame perspective, we can see this being one straight push up, okay? And a good way to see that is from the daily perspective, okay? So if we have a look and see here now, like, what have we got? We've got this low right here, which isn't confirmed protected yet. But we can see every single bullish impulsive candle just pushing up, okay? So this is now putting an internal higher high. So what do we know price is valid to do now? It's valid to pull all the way back down, because this is just a straight bullish impulse we can see on the daily. So we know now price is valid to come and test back down, put in a new higher low before bullish continuation, right? So we know that just because we get an internal shift here, oh, I was on the H4, wasn't I? Just because we get a breaker structure bearish here doesn't mean that we've got structural alignment, because this is all one bullish push up. Then we can see the new higher low before bullish continuation. So this is something that I really want to reiterate and see here, right? And this is what leads me into this sort of trade here, which is the position that I took. So I understood that this high was potentially weak here, okay? And we got this sort of sweep of this sell side liquidity here, okay? We got a mitigation here to a higher time frame demand level, and I had full confidence in this POI potentially coming to put in a new high, okay? Because I didn't see this supply level holding. Could it have gone short? Absolutely, right? But I was confident in this POI mitigation here, and then I also caught the bottom here. Probably got out somewhere around here at a small R, because I don't hold trades like that. But if we come into the actual trade idea now, what can we see? So granted, yes, we can potentially see what people would see as structural alignment here to here, right? This is protected, this is weak, this is protected internally, and this is weak. But that was not the way in which I was viewing it and how I was playing it. So prior to the trade, we could see that this was our targeted weak high, and this was the liquidity that we'd be coming to target, okay? Because this overall, we know that above every single swing structural high and low is liquidity. When we have a bullish piece of market structure, the target of this specific swing structure is to come and target the liquidity above the weak high. So what did price go ahead and do prior to the entry is that price came and it did sweep the liquidity above the high. And as you can see here, this is when we get the wick break here. This is what I call an FTC. It's a failure to close, which is essentially to confirm bullish market structure or bearish market structure, we need to see price break through the most recent swing high with momentum and conviction or displacement, however you want to call it. So a wick break for me is what we call an FTC, and it doesn't confirm protect the structure because it's showing more sort of a likelihood of a liquidity sweep, okay? So I saw that as we coming into the trade, and some people would say, but we've wicked the high now, is the low weak, etc. And no, that's not how it works, because it all depends how the internal structure has formed leading to that sort of wick break here. So yes, this is our targeted weak high, but if we wick it, some people would say, well, is this low weak? Are we going to come spank the lows? It's all about reading the deeper internal structure, okay? And if we come down to the H1, what can we see? This was our targeted weak high, then we got this push down. And granted, we could say, you know, we are in severe premium pricing here. You know, why do we want to look to long this and stuff? And it's because I did see the expectation for this high to go. It was my overall narrative that I wanted to see happen. We had all this sort of buy side here. We didn't get sort of the most high probable mitigation here. We know we're coming to potentially come and target and take the highs. And then as we can see, how did the internal structure form? Okay, so here was the FTC of what I call it potential sweep here. What can we see from an internal perspective? Okay, we've had a new breaker structure bullish. Okay, this is one swing structure, and again, I'm not going to go into the rules, but when we see, I'm going to go into that. It's complex if you don't understand the rules. It's quite difficult to understand. But as we can see here, this is all one bearish pull right here, right? Or sort of all one in bearish impulsive phase. Now, if we're going to see this swing structure hold, then we should see the internal structures bullish hold to take the swing. So I did not stack confidence in the shorts to come and hold because my narrative was preferred bullish. Despite that sweep here, what can we see? We've got an internal structural break bearish here, creating a new protected low and a weak high, okay? So we understand now that the expectation of this bullish swing structure is to see a new higher low before bullish continuation, if this given swing structure is going to hold. As you guys know, I'm structure over liquidity all the time, and some people said, you know, why did you take this buy despite having, you know, liquidity resting here, POI down here? And I've put that POI down there just to show, because some people would say, you know, I've got this liquidity resting here in the sell side, unmitigated demand, why are you not waiting for the sweep? And for me, liquidity, structures first over liquidity. Liquidity can be left for a future date, and structures what I'm playing right now. Okay. So I knew that I was looking to see bullish continuation, okay, sort of coming to take the targeted weak high right here, and as you can see, we got a wick break here. So I'm looking to catch one further bullish impulsive phase, and there was higher time frame demand, higher time frame supply up in here, looking for that bullish continuation. So if you have a look and see what we've got here, this is our most recent M15 structural play that we are looking to play. So this is super, super clean, and the reason why I took it is because the setup was absolutely this was a textbook entry in regards to the position, right? So as we can see, we have this higher high, higher low, higher high. Expectation of this swing structure is a new higher low before bullish continuation. That is the expectation of bullish market structure, okay? Even though that this didn't take any liquidity to the left, when it comes to sort of disruptions and taking liquidity on both sides, this is more for POI selection of past data for when we sort of want to identify sort of supply and demand levels that we sort of leave, and we leave for the future, and then when price comes and mitigates back into them, they're the POIs I'm looking for. When we're playing current price, just because this hasn't taken some form of liquidity to the left doesn't mean we cannot play it, okay? So following this breaker structure, this becomes protected, this becomes weak, and the expectation is to see a new higher low before bullish continuation. So again, all we're doing is mapping out premium and discount and identifying demand levels in this case for price to potentially play. So as I said before, one of my main confluences behind a POI is via a disrupted range, which is a range that has taken liquidity on both sides. We can see we formed this clear disrupted range here. We took this high, we took this low, we took this high. Forms a nice, clear, clean disrupted range, leaves imbalance, etc. Okay, so as you can see, here's the POI that I was looking to take. And if we then go ahead and have a look here, it also, what have we got? Okay, we also did have a POI here, and some people said, you know, would we be looking to get involved in a buy here? And for me, this is not the case that I would be wanting to look for, okay? Because this, for me, I've got this identified as a lit point. I'm not going to go into the logic behind a lit point, but I see this point as an inducement point, and it's all based around how we mitigate back into previous ranges, i.e. did we break into another range with a disruption? Because if we did, then it's a valid POI. If it failed to take liquidity, then it's more of an inducement level for me. So I'm not going to look to get involved in this position because this POI here failed to take liquidity to the left. I did not look for buys here and saw this as inducement to play for this disrupted POI here down at the extreme. So as we can see here, clean as day, now I'm trading M15 entry models and I'm just taking stop orders of M15 candles. And as you can see here, what do we get? Okay, here was the POI that we had, just waiting for my alert to go, wait for the ping to the POI, which is what we get. We get a nice aggressive mitigation. We take the inducement point right here. We also take this sort of low right here. So we take this inducement that was formed just above here, aggressive mitigation into the zone. And then all I'm doing is setting a stop order on the candle here, the most recent. We can see all these candles are internal. So I leave my stop order on the high of that candle. If price continued to push down lower, say this candle pushed down to here, then I'd have my stop order on this candle. But obviously this is our most recent candle and sort of the range that we are playing. All of these bullish candles are internal. My stop order is on the high here, covering the low here. You can be more conservative and cover the whole low of the POI if that's what you choose to do so. But for me, that's enough confirmation for me to get involved in my position, covering the low right here. And then as you can see, we get a nice clean push coming to target the liquidity above this higher high, and we can see that it comes and hits target. So that was the position breakdown of, I wanted to go over, like I said, a bit of previous price action, excuse me, breaking down sort of what we can see here, why the expectation this has played out. Not going into a lot of detail, but I've gone into a lot of detail there, a lot that some people might find confusing. If you've been in my community before, that should all make sense to you. And that's pretty much it. So that's the only position that I've had this week. There have been some valid setups that haven't fit my, well, they have fit the plan, but you know, price action hasn't been too clean. I had a win and a loss last week. You know, I got stopped out by 0.2 ticks, which is what it is, part of the game. And we're just ready back to smashing it now. So if you like the video, please do like, subscribe, and all the rest of it. If you guys have any video suggestions that you want to see, honestly, just pop them in the comments. Tell me what you want to do, because I'm more than happy to do it. I'm a technicals guy, more or less, and you know, anything that people want help with, I'm more than happy to go ahead and do so. So hope you all have a great rest of the week. Hope you all smash it, and we'll see you guys next time.